How to invest as a young professional. You are in your career or you've started your business and you are making good money from your business, and now you have money to invest. So how exactly do you do that? That's what we are diving into in today's video. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. I am super passionate about teaching people to invest their money, so I'm really excited to dive into this topic of how to invest as a young professional. Because honestly, I wish I would have started investing even younger than I did, because then I would have been able to become financially free even sooner and become a millionaire earlier than I did. And not only that, I would have been able to create a lot of financial security for myself. All right, we are first going to talk about making sure that your foundations are set up so that you actually can invest or should be investing your money. And then I'm going to go over how you can invest your money. And I will share my personal experience on how I have been able to invest my money. All right, so first off, laying the foundation. We want to make sure that we have an emergency fund set up and that we have it in a high yield savings account. That just means that you are earning a little bit more money on your savings account, but a lot of high yield savings account are giving you around 4% interest. I personally like using Ally. I think they have 4.25% right now. So my money that is just sitting there for my emergency fund is earning 4.25%. And then the next thing we want to make sure that is taken care of is that you have your high interest debt paid off. We don't want to be making less money when we invest our money than we are paying on the interest rate on our high interest debt. For example, if we have a credit card with an 18% interest rate, we definitely want to pay that down first and then get our money invested. And then the second item for us to do is to figure out the investing basics. We want to understand what we are investing in. I made this mistake of investing in something that I did not understand, and I regretted it later and lost thousands of dollars. So it's very important that we understand what we are investing in. And that's not that we have to understand everything, especially if we are investing in the stock market. There are a lot of different things to learn about when investing in the stock market, but we don't need to know everything. We can learn those basics and get started in the stock market. And then the third item that I want to bring up is to invest with a goal in mind. I know this has made a big difference for me. I talk about this a lot on my channel. And it's important that we know what we are investing for so that we can make the best investments to help us achieve that goal. For example, if we want to retire by age 40, that is going to look very different than if we want to retire by age 65. We want to set up different accounts, possibly choose different investments. So once we know that specific goal, then we can open up the best accounts. We can invest in the best funds or companies or bonds that we need to. Or we can even look at real estate if that is something we are interested in. So set your specific goal with investing, and it can be something very simple. Maybe you just want to have fun with a little bit of your money that you are investing. And that way you can just get your feet wet and then start to understand more and more about investing and get better as you go. And then you can continue to set more goals along the way. And then the fourth thing is to realize risk versus reward. A lot of people that want to get started investing are sometimes afraid to invest. So they just start with a very small amount and they never increase that. But we want to realize that we need to take some risk in order to get reward. And I'm not talking about being crazy risky and not understanding what you are investing in. We can definitely take calculated risks, but we cannot just leave the majority of our money sitting in a savings account and expect to retire one day. For example, when we invest in stocks, that is going to give us a lot higher reward than if we were to invest in bonds. But bonds are a lot less risky and stocks are more risky. But we need to realize there is a trade-off with that risk versus reward. We can't just invest only in bonds and expect to grow our wealth as quickly as if we were to invest in stocks. And if you want more details about this, I have another video about risk tolerance. I'll leave a link above. You can check it out later on. And now let's move to the how-to steps. Since we have our goals set up, we want to figure out what is going to be the best way to invest our money. And I'm going to share two different ways that I have personally done. I've invested in real estate and the stock market. When I got really serious about investing, I already had a property and I was house hacking, so I had 2 roommates in there. So I was creating some cash flow for myself. But I wanted to get more serious about this, and so I ended up purchasing a second property, which was strictly a rental property. And I purchased a 2-bedroom, 2-bath condo. I didn't want to feel overwhelmed with purchasing a single family home and having to take care of the yard and replacing the roof and things like that. So I just thought I would start very small, and that's why I did my 2-bedroom, 2-bath condo. So you can definitely start with something very small and then build up over time. And this goes along with the stock market as well. You can start with a smaller investment and continue to feel comfortable with that investment and then increase over time, realizing that risk versus reward. So we want to invest as much as possible as soon as possible, but we also want to feel comfortable with our investing. And with the stock market, you can honestly get started for $5. So it doesn't take a lot of money to get into the stock market. And if you want to know how that works, I have another video. I'll leave a link above. You can check it out later on. But if you are a young professional and you do now have money to invest consistently, I would definitely start with more than $5 and continue to build up your investments over time. And if you want help investing in the stock market, I have a free masterclass where I go over how I can help you do that. I will leave a link below. You can check out the free masterclass. But one easy way to invest in the stock market is to invest in an index fund. That means there are a whole bunch of companies inside of just one single fund. So it's giving you good diversification, which is going to reduce your risk, but still give you enough reward because you are investing in stocks if you choose an index fund with stocks inside of it. If you want to know which index fund is my favorite, I have another video about that. I'll leave a link above. You can check that one out later on too. But an index fund is a really easy way for a young professional to get started in the stock market. When I was first getting started in the stock market, I had no clue what I was doing, and I was pretty afraid to invest my money. I thought I would lose it all. But once I started doing some more research and figuring out how I wanted to invest, I was able to become a lot more successful with my stock market investing. But in the beginning, it was a little rough. The first investment that I actually made, besides what was in my 401k, but I didn't really understand my 401k. But when I set up my own brokerage account, I decided to take a hot tip from a blogger that I didn't even really follow that much. So I bought one share of one individual company. And after I did that, I thought, Tiffany, this is not the best way to be investing your money. You should be investing in things that you actually understand. So I changed my approach and I invested in Facebook, for example. I was using Facebook, my friends were using Facebook, I knew what it was about. So I purchased a share of that, and then I purchased another company that I was familiar with, and I purchased another one, and I purchased more shares of those individual companies. So currently I have about 10 individual companies or individual stocks that I'm invested in, and then I'm also invested in my favorite index fund. So you can definitely take that approach, or you can just invest in an index fund and keep it even more simple. And going along with keeping it simple, you can also automate your investing depending on what you're investing in, but this is what I have done. I was able to set up my account at Vanguard, that's who I like using, and I'm able to automatically invest in that index fund every single month. So I have an automatic transfer from my checking to my investment account and then directly into that fund. So it's a really simple, hands-off way to invest. And it also helps take the emotion out of investing, which a lot of people struggle with. The stock market is actually based on fear and greed. And when we are investing, we want to try to avoid those two emotions for sure. Because when people become greedy, they usually start to see an investment go up, and by the time it's already gone up, then they decide to get in, and that investment can definitely drop, and then they think, oh, I need to get out of that investment. So they're essentially buying high and selling low. We definitely want to do the opposite. We want to buy low and sell high. But we can also utilize that dollar cost averaging strategy if we are automating our investing. We can choose a really good investment to invest in and realize that it will go up over the long term, and that way we can dollar cost average and avoid the fear and greed because we won't be checking our investments all of the time. We will just have that automatic transfer set up so that we can average out the cost of our investment over time. And I know that investing can seem overwhelming or it can seem really daunting. That is how I felt in the beginning. But once you start to educate yourself a little bit more and you become more familiar with investing, you actually open up an investment account, you make a small investment, you take those steps, And that actually helps you become more familiar with investing. And of course, as a young professional, that means that you are going to have a longer amount of time to invest. So you can definitely take advantage of compound interest right now. That is interest earning interest. The longer time horizon you have to invest your money, then the more you are going to make through compound interest. And we also want to be as risky as possible, have as much risk as possible when we are younger, because we can take those highs and lows in the short term and be fine in the long term because we have that longer time horizon to invest. The way I like to look at this, if we were just looking at the stock market, if I'm investing in stocks, that means I'm growing my wealth. If I'm investing in bonds, that means I'm preserving my wealth. So if I have a longer time to grow my wealth, I definitely want to be in stocks. And if I am closer to retirement age, then I can move some of my money over to bonds. So it's just preserving itself. It's preserving its investment, but not really growing. And when I was a younger professional getting started investing, retirement seemed so far away. But since I have learned a lot of things over time, and I even found the FIRE movement, which is financial independence, retire early, I saw that people were retiring a lot earlier. They weren't waiting until 65 to retire. And I wanted to do that for myself. I wanted to retire early. So I focused a lot on investing as much as possible. And you don't have to take that route, but just realize even if retirement does seem far off, it is going to be so much better if you can invest as much money as possible right now. That way you will have plenty when you retire and you won't have to invest so much money in your later years. I feel like that is one regret that a lot of people have. They keep putting off investing because retirement seems so far away. But then all of a sudden they're in their 40s and they're thinking, I haven't invested anything. I better get started. And they have to go really aggressive so that they can retire by 65. So the earlier we can start, the better off we are going to be. So comment below and tell me if you are going to start investing your money. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel, and hit the little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure to check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.